Hi guys, so I'm back again to do what will probably be the last recording for now. Exam paper 2020, question 5, and then I also want to include question 7 because both of these questions cover the appropriations account. Question 5 covers the appropriations account for a partnership, and question 7 covers the appropriation account for a CC. So let's have a look at these two questions. They're not very long ones, so it shouldn't take us too long, but at least you can have a look at what the workings look like. Okay, so question 5. So this is what learning unit is. This is learning unit 5. Partnerships. You're bound to get a question on, well, you will get a question on partnerships, and the appropriations account is usually the question that you guys will get because it's really the most, I won't say important part of the partnerships, but it is the one thing about partnerships that's different to any of the other structures. So that's then usually what they test you on. So let's have a look. The following information was taken from the books of Newcastle Enterprises. The balances for the financial year ended 29th of Feb 2020. So here we've got balances, and take note as well that these balances of the two partners' capital accounts and the two current accounts are the balances as at the beginning of the year. So the first day of this current year, these balances are the 1st of March 2019. Okay, so as they were at the start of the year. Then we've also got the two partners' drawings accounts. That will be for their drawings as in total by the time we got to the end of the year. There is a carrying balance for a replacement reserve, which is profit that the company holds in reserve for the use of the company to in the future, they call it replacement, to be able to replace any property, plant and equipment as that wears out and needs to be replaced. So then we've got the profit and loss, which will be the profit and loss for this current year. So you can see in terms of this TB that we're looking at, the income and expenses, those year-end entries, closing entries have already been done, and we have produced our profit and loss for the year, which we must now divide between the two partners according to the partnership agreement. Okay, so that tells you at what point we are at in the year-end process. And then the other account we've got in our TB is a property, plant and equipment. So these are all of the carrying value of the assets that the partnership owns. Okay, so appropriations according to the partnership agreement for the year ended. This is what we must do. Interest on capital must be appropriated at 5% per annum, and the capital account balances remain constant. So we know that these two capital balances that we've got there, we will then work out the partner's earnings of 5% of those amounts. And that will be then appropriated to the partner's capital accounts out of that 420,000 Rand profit. Then interest on drawings must be appropriated at 12% per annum. So the drawings is money that the partners take out during the year. So interest on drawings will be owed by the partners to the partnership. So this interest on drawings will actually be income for the partnership. We must assume that drawings were made 3 months prior to the end of the financial year. So take note, the interest is 12% per annum, but we're only going to charge them 3/12 because they only took their drawings, they've only had their drawings for 3 months. And then lastly, interest on current accounts must be appropriated 7% per annum, and this is on opening balances. So in other words, these current account balances as they were at the beginning of the year, we're going to use those balances to calculate interest on current account. And if you have a look at these current accounts, you'll see that for Mr. Manchester, that balance is a debit, which means that he actually owes the partnership that money. If it's a debit, it means that that is kind of like it's a debtor to the partnership. Whereas Mr. Liverpool, his current account is in credit, which means the partnership owes him that 8,000 Rand. So this would be an asset to the partnership, and this would be a liability. Oh gosh, that's not spelled correctly. Liability of the partnership. So when I say liability of the partnership owes Mr. Liverpool 8,000, and for this one over here, Mr. Manchester owes the partnership 18,000. Did I say that the right way? Partnership owes Liverpool, Manchester owes partnership. Okay, so those are the balances that we've got. So then let's have a look. And they said both partners must receive an annual salary. Manchester must get 65 and Mr. Liverpool must get 45,000. That also gets paid out of that profit. And then specifically, Mr. Liverpool must get an annual bonus of 10,000 Rand. Also make sure that you get the amounts correct for the correct partner. And then out of our profit for the year, we're going to take 35,000 and we're going to put that in the replacement reserve. So that 35,000 of the current year's profits will not be will not be distributed to the partners. And then after doing all of that, the remaining profit is then going to be split between the two partners in the following ratio. Mr. Manchester must get 5 parts and Mr. Liverpool must get 3 parts. So remember, that means there'll be 8 parts in total. So 3 plus 5 equals 8. And when we work their proportion out, Mr. Manchester will get 5/8 of the remaining profit, and Mr. Liverpool will get 3/8 of the remaining profit. So we are required to open post 2, which means do all of these general entries here, and balance, which means at the end of the year, close the account off, the appropriations account in the general ledger of Newcastle Enterprises for the year, round to 2 decimal places. So take note, we must open, which means we must open the account. We must start it with its opening balance, or not the opening balance. You'll see when we do the account how we open it. We open it by transferring the profit out of the profit or loss account and into the appropriations account. And then post 2, so post 2 will then be recording all of these interests on capital and current, the salaries, the bonus, etc., and then balance the account. And this is for 20 marks, so you've got 20 minutes to do this. Okay, so let's go and have a look at what this looks like. So here is our appropriations. Remember, it's the appropriations account in the general ledger, which means that it is one of our T accounts. So the top of the T is the name of the general ledger. Debits will be on the left-hand side, credits on the right-hand side. We've got date details, folio amount on the left, and date details, folio amount on the right-hand side. So the T account. So the first thing that we've got to do is transfer the profit out of the profit and loss account and into the appropriations account. So profit and loss is currently a credit of 420. So we are going to debit profit and loss. This should be profit or loss. We're going to debit profit or loss and credit the appropriations account. So here's our appropriations account, and we are crediting it with 420 Rand. Sorry, 420,000. Okay. Credit appropriations with 420. And under the details column goes the name of the account that is getting the debit. And that is then profit. $70,000 for the one partner and 50 for the other. We add those two together and multiply that by 5% to work out the total interest on capital. And we are now going to debit the appropriations account with the 6,000 Rand and credit interest on capital. So remember, just kind of to let you, what would have been, there's not a step that they've left out, but we already would have this journal entry over here. We would have taken, we would have created the T account. I'm just going to write it here in abbreviate interest on capital, and we would have worked out the interest for the one partner and credited this account and worked out the interest for the other partner and credited this account, so that the interest on capital would then have the balance in it that we owe to the partners as their interest on capital. We are now transferring this interest that we owe them to the appropriations account, if that makes sense. So we are, sorry, we are debiting the appropriations account and crediting interest on capital. Okay, so we are going to credit interest on capital. What was the total amount there? 6,000 Rand. Oh, I don't think that's going to allow me to type there now. It's a bit annoying. Let's see if I can use this. That would be, I don't think you're going to read that properly, but that would be 6,000 Rand on the credit side. No, that does not look like a 6. Okay. So that's the interest on capital. Then the next line says interest on drawings must be appropriated at 12% per annum, and we are only taking that at 3 months prior to the end. So here's our two drawings amounts, 5,000 and 4,000, and again the workings are here, 5,000 plus 4,000, so 9,000 Rand times 12% per annum multiplied by 3/12 to get the total amount. So the interest on drawings is going to be income for the partnership, so it must go on the credit side of the appropriations account because the partners owe the business that interest on their drawings. The interest on capital goes to the debit side of the appropriations account because that is an expense for the partnership, because the profit is being 6,000 Rand of the profit is being paid to the partners as interest on capital. Okay, so we've done interest on drawings and interest on capital. Then the next one says interest on current accounts must be appropriated at 7% per annum on opening balances. So we've got our two current accounts. Remember, these two are, we've got 18,000 debit and 8,000 credit. So in total, the partnership is going to be owed interest because this 18,000 debit is bigger than the credit. So again, if we go and have a look at the workings, they've split it here as 18%, 18,000 times 7% minus 8,000 times 7%. And because again, that money is owed to the partnership, the interest on current is going to be on the credit side, on the income side for the partner. So remember, this appropriations account is the partnerships, the partnerships, the company, the business's account. So the right-hand side will be the business's income, and the left-hand side will be money that the business is paying out to the partners. So now we've completed the credit side of the appropriations account. We've got the profit that was paid in there, the interest on drawings that the partnership earned, and the interest on current account that the partnership earned. So this is the total amount of money that the partnership has got to distribute to the partners. So we've already worked out 6,000 Rand that's been distributed as interest on capital. The next distribution tells us about the salaries. Mr. Manchester must get 65,000 and Mr. Liverpool 45,000. So again, that will go to the debit side of the appropriations account. So 65,000 debit appropriations, credit salary Mr. Manchester, and 45,000 debit the appropriations account and credit the expense account salary Mr. Liverpool. So again, if I showed you that salary, these two salaries accounts would already exist, that during the year when their salaries were paid, I'm just going to write salary, but there'd be one of these for each of the partners. Each time salaries were paid, we would have debited the salaries account, so 65, and we would have debited the salaries account with Mr. Liverpool's 45, and we would have credited the bank account. But can't get in there to type. The bank account would have been credited. Debit salaries account, credit bank. We are now transferring this debit in the salary account. We're closing off the salaries account, so we're crediting the salaries account for Mr. Manchester with 65, debiting appropriations, and we're crediting the salaries account Mr. Liverpool with 45, and we are transferring that debit to the appropriations account. That's why those two accounts are called salaries. It's the same thing with interest on capital. We've already got an existing interest on capital T account, and we're transferring that balance in here. And the same thing with the bonus. Bonus to partner. Only one of the partners is getting a bonus. Only Mr. Liverpool must get a bonus of 10,000 Rand. So again, we are crediting. There would be a bonus expense account that was created when we paid the bonus, physically paid the cash of the bonus. We would have debited the bonus account with what was a 10,000 Rand and credited bank with 10,000. Now we are closing this bonus account off to the appropriations account. So we're debiting appropriations with 10,000 and crediting bonus to partner with 10,000. Then the next thing they tell us to do here is of that profit, we must take 35,000 and transfer that to the replacement reserve. So remember here in our appropriations account, the profit is sitting on the credit side. So if we want to take some of that, if we want to transfer some of the profit to the reserve, we must then debit the appropriations account and credit the replacement reserve account. So if we go back here to our original trial balance, the replacement reserve, before we did that, already had a credit balance of 65,000 in it, and we are now increasing that by another 35,000. This replacement reserve account, these reserve accounts fall under the equity section of your balance sheet. That's why they are credits. So like a capital account is a credit. The current account of the partners are credits if the partners owed money, and the replacement reserve is a credit because that is part of the profit that the business is holding in the equity section of their balance sheet to use in the future to purchase new assets. Okay, so we've taken 35,000 out, transferred it to the replacement reserve. And then we've done all of everything according to the partnership agreement, excepting for the remaining profit that must be split between the partners in the following ratio: 5/8 to Manchester and 3/8 to Liverpool. So here's our profit split at the bottom. So we first have to work out how much of the profit is left, so we can take that amount and multiply it by 5/8 and multiply it by 3/8 to get the amount for each of the individual partners. So what you would do at this point is you would add up the left-hand side of the appropriations account for 2970, and you would add up the left-hand side as far as the replacement reserve, because then that's the amount of the profit that we've already taken out. Okay, so for 2970 from your credit side of the appropriations account minus everything on the debit side, and that will give you the balance of 259,970, which is the amount of profit that's remaining that must now be split between the two partners. Show your workings like this, each partner's individual amount, and then we will now close off the appropriations account so that the total debits equal the total credits, which means that the brought forward balance of the appropriations account will be nil. We must now debit the appropriations account and credit the current account of Mr. Manchester, debit the appropriations account and credit the current account of Mr. Liverpool. Debits now equal the credits, which means 429.70 minus 429.70 equals 0. So there is no balance brought forward, which is the whole purpose of the appropriations account, that when we finished, we have cleared the appropriations account. So this appropriations account is actually one of our temporary working accounts that we use at the end of the year in order to facilitate this splitting of the profits between the partners according to the partnership agreement. Its whole purpose is to act as a working account, just to do this collecting of all of the profits on the right-hand side and then appropriating the profits on the left-hand side according to the instructions that you are given. So that by the time we are finished, all of the profit has been appropriated wherever we were told to put it, and the balance in the appropriations account is now 0. So you can see that the two current accounts of the partners is now going to be increasing by that amount of the profit that has been allocated to each of them. So if you go back to this original TB, here's our two current accounts. And you can see here these two current accounts. So Manchester's account will now be in a credit balance with the amount that's been paid to him. And Mr. Liverpool's current account will increase as well by the amount of profit that's been allocated to him. Remember, in a partnership, we use the current account for transferring the amount of profit at the end of every year that belongs to the partners. And we only use the capital account for contributions. So and that's just so that we can keep them separate for purposes of working out the interest that we owe the individual partners for the use of the funds that they have transferred into the business. And any profits that the partners earn, we pay into a separate account called a current account, so that we can keep contributions separate from accumulated profits. So in that respect, it's different to a sole trader. A sole trader, we only just keep one capital account, and we put his contributions and his profits into that same account. And we can do that because he's the only person involved. So we don't need to separate the capital amounts from the accumulated profits. Okay. Does that help you to understand appropriations for partners a little bit better? So let's just quickly go to question number 7. Which in this one over here, they have said, open, post to and balance the appropriation account for the year ended 31st of July 2020. And this is for a CC, in other words, for a company, as opposed to a partnership. So the CC has got members. In this case, we've got 3 members. The founding statement sets out the following. It's a spare parts retailer, and these are the 3 members and their percentage interest. So remember, the total percentage interests must add up to 100%, because that is then the total 100% value of the business. How much of the business is owned by each of the members. These are the contributions in total that each of the members made. And then the following balances appear in the CC's books at the end of the current financial year. Total members' contributions, 1 million. And here's our million, 5, 9, 1 million in total. Okay, remember that goes into one account called members' contributions. And then retained earnings, 236,000, which means accumulated profits up to the 1st of August. Gosh, they've got their, that should be 2015. They've got 2015 there and 2015 there. So that should be a 5, 2015. Hang on a minute. I see over here there's something. Let's rather make this 2019. Just do this here. That should be a 9. That should be a 9, 2019. That's July 2020, and this is 2019. This is 2020. Okay, so it's this amount here, this 5 that was incorrect, and it's that 5 there that's incorrect. Okay, that will make more sense. So oh no, you know what? I am being silly. It is 15. I'm thinking that this is to do with the, let me see if I can I rub this out? How can I get rid of the 9? Sorry for confusing you. 2015 is when the business was registered, so that is correct. And when it was registered in 2015, this was what was decided in the contributions that the partners made. I beg your pardon. I was misreading exactly what I always tell the students not to do. So now we are 5 years later, year ending 31 July 2020, and at the beginning of this year, the total retained earnings was 236,000, total retained profits. Now, with regards to this financial year, so financial year ending 31 July 2020, the following information was available. We've got a profit for the year of 940, and it was after taking into account transactions with members like remuneration. So in other words, their salaries, etc. Members had been paid salaries and bonuses and everything, and the profit of 940 is what's left over after all of that. Income tax for the year that the CC must pay is 260,000 Rand. And the members are entitled to a distribution of profit of 45,000 Rand each, irrespective of how long they have been a member. Okay, so in this case, it looks like all of these members joined from the beginning. Open, post to and balance the appropriation account for the year ended 31 July 2020. Okay. Everybody got that? Okay, have a look at that information. So now we're going to go to the appropriations account. Okay, and remember the appropriations account, again, it's our T account in the general ledger, date details folio amount debits on the left, date details folio amount credits on the right. And again, the first thing that we do is to transfer, in this case, the retained earnings, which means all previous profits that the business is still holding onto, into the appropriations account, as well as the current year's profit. So that on the right-hand side, which is the income side, where we hold the profit, we've got a total of 1176, which is all the profits up to the beginning of this year, plus this year's profits. Okay, this is the difference between partnership's appropriation account and a CC's appropriation account. Okay, everybody got that? So this is your first two entries are transfer retained earnings to the appropriations account. So debit retained earnings, credit appropriation, and transfer the profit or loss to the appropriations account. So debit profit and loss, credit appropriation account. Then when it comes to a CC's appropriation account, we always, the first thing that we pay out of the profits is the tax. We can't distribute any money to any members if the tax has not been paid. So we are going to debit the appropriations account with the 260,000 and credit the income tax expense account. Okay, so we've now basically paid the tax out of the profits. Okay, so 1176 minus the 260 tax is what we have then got left in profits for the business. Then they said that each of the members, there were 3 of them, must each get a distribution of 45,000 Rand out of the profits. So 45,000 times 3. Remember also when it comes to a CC, we don't do these appropriations in each individual member's name. We keep that record separately, which you've got in your textbooks, those separate records per member. And in the appropriations account, we just do one entry, debit appropriations account with 135,000 and credit distribution to members with 135,000. Then we take 1176 minus 260 minus the 135 distribution. What's left over is 781,000. So that now gets transferred back to retained earnings. So debit appropriations account, credit retained earnings. And then at the beginning of the next year, you will now have an opening balance of 781,000 in the retained earnings account. And when you get to the end of next year and you do this appropriations account again, your very first entry here at the top will be debit retained earnings, credit appropriations account, 781,000. Okay, so you see what we've done. We took accumulated profits, we added the new year's profits to it to get the total accumulated profits. We then paid the tax out of that amount of profit. We distributed the 45,000 to each member, and then the total profits left over, we transferred back into the retained earnings account. So once again, we are using this appropriations account only as a temporary working account that allows us to do this accumulation of the profits, payment of the distributions, and then working out how much profit we've got left, and then that goes back to the retained earnings account until the end of the next year. Okay, so I wanted to do those two questions together so that you can see the difference in the retained, in the appropriations account for a partnership as opposed to a CC. So those two questions allowed that quite nicely. Okay, guys, I'm going to end this video here again, and so that I've got time to post it for you. Wishing you all the very best of luck for your exams. I'll be holding thumbs, and I will chat to you guys again soon. Okay, thanks, guys. Bye.